Hey, good morning. Happy Monday. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Whoa, hey now. So like I said, hey, welcome to the Forex.Today YouTube channel. Please subscribe. Let's get this right. I guess I'm supposed to be back here. Please subscribe, please like, do all that kind of stuff. But subscribing is important because when I hit the stream button, it brings you directly into the room. It just makes everything for you easier. Simple enough, right? I do these sessions Monday through Friday. 7:30 in the morning, New York time, a couple hours before the New York session opens. It's also approximately London lunch. So it's a good opportunity to get together as a Forex trading community and share our ideas and support each other on this journey to success. The sponsor of this webinar is tradersway.com. They make this possible for you. This is streamed live on YouTube for free for you and your success. The whole idea is that you learn and you enjoy, and one day when you have the skills and the confidence to trade real money, you will choose Traders Way as your broker because of these webinars. Because they're investing into your success up front, you pay it back by becoming a client when you're ready. So today I'll do technical analysis. We'll do some fundamental analysis. I thought we'd look at the calendar. Also, if I go like this, you will see charts. If you want these chart templates, the download link is in the description below the video. So help yourself, compliments of the firm. Thank you very much. By the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way. So please get involved in today's webinar, ask questions, and I will do my best to address those questions. If I don't get to your question, please leave it in a comment below the video once this webinar is over and the recording is on the website or on the YouTube site. Also, maybe you're watching the recording. Everyone, feel free to leave questions and comments below the archive of today's event, and I will do my best to address those questions tomorrow. So anyways, I think we'll do technical analysis like we always do. Look at that gold break we've been waiting for. Nice. But also, we have a busy event schedule for this week, so I thought we would cover that. Good morning, Daniel. Let's see, I'm not quite set up properly. Yeah, well, anyways. Let's start with the calendar, shall we? Can you guys see that okay? So the first thing I did was I filtered out all the low impact events, as you can see. So we're only looking at medium and high. And really, I only care about the high impact stuff, but sometimes the calendar, all calendars kind of misappropriate their level of. So anyways, I like to look at medium just in case they stick an important in as in a medium. So, okay, this week is going to start heavy with the pound. Okay. We got that going on today, which is essentially in an hour, right? Or 2 hours, I guess, 2 hours. Okay, but then we got this going on tomorrow. And that kind of sucks up all of tomorrow as well, right? This is the plan B. So it's going to be pound heavy right off the bat. Now, Draghi is also speaking today, so that's going to move everybody, right? So Draghi, but I think more important than that is going to be, eyes on the prize as far as Brexit's concerned. So Great British Pound and and then Great British Pound, where is it? There it is. Okay. Cool. Later today, or really Tuesday in Asia, we have export data out of New Zealand. Now, see, like this is medium, right? But what we're trying to see is that they are exporting more every month. We want them to be an exporter. We want New Zealand to export more, so they send more out than they import back in. Okay, that's going to be a good thing. So right now they export 4.94, they import 5.80, trade balance negative. Okay, so right now you can see they're importing more than they're exporting, and that's bad. Okay, we want them to be an exporter. Case-Shiller comes out tomorrow, and the market used to make a big stink about Case-Shiller because the market was bad. Then the market improved, and we had years and years and years of steady growth in sales and home prices. And we got, essentially you get the idea. The things were fine. Things were good for home prices. And its importance as an economic release was diminished. Shiller is from Yale, but he did win the Nobel Prize, but he's from Yale. So there's that whole thing. But here's what I'd like to say about it. There's a lot of talk about the real estate market in the United States cooling down or slowing down or whatever. Now, I may or may not agree with that, but it would be interesting if home prices, according to Case-Shiller, what if this report showed a decline in prices? Then that would have, I think, jolting consequences. Maybe not lasting, but okay. So we'll take a look at that. Okay, I think so. Suddenly, this is important again. U.S. consumer confidence tomorrow, great. See, I don't like these types of things. How you feel to me is irrelevant. I don't have emotions. They were amputated at birth. So I prefer things like retail sales. I don't care how you feel. I don't even care what most people think. I watch them spend money. And that's what it comes down to. That means I'm a heartless son of a gun, right? I think I once said that they should put your contribution to GDP on your tombstone just so we know how many flowers you should get. But, that's heartless. Anyways, moving on. I don't care about consumer confidence. Okay, then obviously we have Brexit. That's going to take over pretty much all of tomorrow. Some Japanese news, fine. And then what? Aussie! Oi! CPI out of Australia. See if we can crack the 2.0 level, huh? Batman, I am heartless. So anyways, RBA, CPI, awesome. We'll see what comes out of there. Again, a crack of 2.0 would be great. once again, these guys are supposed to be exporting more than they import. And so, this is all New Zealand and Australia. They're going to lag if China is lagging. And of course, China's lagging because Europe is still bankrupt. Socialism. But we'll see. It's funny. Did you guys hear Trump talk about Venezuela? He's like, they used to be the richest country in the world, and now they're hopelessly broke. That's socialism for you. That was funny. All right, so moving on to Wednesday. What's going on Wednesday? Oh, GDP. I guess we're supposed to care about CPI out of Europe, but why? Or German CPI? Who cares? There is none. All right, but moving on. Usually GDP is enough, right? Right? Although I don't even like GDP as well because it's lagging. And I think really, if you were a true analyst, you'd build your own GDP, right? So you can look at consumer spending. How would you do that? Retail sales, for example. Plus business spending. Remember, businesses don't spend, they invest. So you can get that kind of data too, right? Plus government spending. Well, they give you a budget, so you know what that is, right? Plus what? Exports minus imports. Okay. That's your GDP. So you can model all that and figure it all out. So by the time it's reported, we traded that a month ago, right? But Wednesday is going to be crazy. So you get GDP at 8:30, but you notice we got another dumb prediction at 8:15, right? ADP, then GDP. Then what? PCE, home sales, and then interest rates. You're like, what? So there's like jobs, productivity, right? Spending, consumer spending. So spend. Homes, which is a form of wealth, right? Consumer wealth, right? And then interest rates. That's like everything that leads to GDP, right? Like, for example, your marginal propensity to consume is going to be influenced on things like, so that's your PCE, your marginal propensity to consume. So right now, if you get $1, how much of that dollar are you going to spend? How much are you going to save? And we know 70% of the U.S. economy is this decision of people saying, we're going to spend it, right? So I think it's actually closer to 80%, 80 cents is spent, 20 cents, is saved, which isn't quite. By saving, I mean paying down your credit card. Anyways, and this is going to be influenced by, do you have a job? Do you have a good job? Do you expect your job to pay you more, right? And then also your wealth, household wealth, as an economist would measure. And that's like if your house is going up in value, you have paper wealth, which makes you feel confident, which increases your marginal propensity to consume. And you end up saving less. Like, why would you save more when your house is saving for you by making paper wealth, right? And then what else influences your marginal propensity to consume and your consumer spending? And that is interest rates impact the cost of your money, and that changes things, right? That influences that. And all of that gets turned into GDP, right? Which is the productivity of the entire country. So it's all kind of interesting. We get it all like in one morning. Pa-chow, 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 pa-chow. Cool. Yeah, Chuck Duck, last CPI out of Australia was a big miss. Yeah, once again, I blame the Europeans for that. They're flailing around, splashing like a baby in bathwater, making a big mess and getting nothing done. It's impacting places like China, and then because of China's slowdown, then Australia and New Zealand and even places like Canada. See, the Canada gets to rely on the United States, though, right? So that's pretty good. So the Canada will be impacted in similar ways as Australia and New Zealand, except their major trading partner is the United States. The major trading partner for New Zealand and Australia would be China, so that sucks for them. Okay. So anyways, that's pretty much our life till Wednesday. You know, GDP, it's going to be pound, 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 and then dollar, 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 dollar. Okay. Then Wednesday, Aussie rate decision. Wednesday's like a killer day, huh? European GDP on Thursday. Yada, yada, yada. Some more PCE data out of the US. Great. Okay. But that's, again, that's a part. You can put core PCE under your C in your formula for GDP. Okay. And this all leads up to non-farm payrolls with ISM after the fact. Boo. Those are lame when they're after the fact. Okay. Cool. So let it be written, so let it be done. That's my story, and I'm sticking to it. It's going to be a busy week, guys. Pound, 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 dollar, dollar, dollar. All right, so let's move on to technical analysis here. Here's gold. Gold! Okay, gold. So what do we do here, cowboy? If you're a bull. And really, in this pattern, there's no reason to be a bear in this situation. So if you want to be a bear, you just can't sell there. It doesn't make any sense. But you could look for something like this later later. But right now, the standard operating procedure in a situation like this is buy the roll reversal. I mean, we drew this roll reversal, 3 weeks ago. And ever since we said, well, let it break, right? Catch the pullback. And it's pretty much doing that. So it's decision-making time for you, right? If you're a bull. If you're a bear, just walk away, I suppose. Oh, got pushed off, Chuck? Okay, thank you for that. We'll keep an eye on that, okay? All right? That could be very, very interesting. It could be a meaningful break. We have a request for oil. Here's your WTI, American oil. And sideways again. Here I go again on my own. So, yeah, going nowhere fast. At least it's stable. Yeah, Highlander. So, I guess you could start playing it early in the week, but it's so hard because that whole trade is based on remittance, right? And we know that's not going to happen until the end of the week. But we also have a lot of dollar news before then, right? I mean, not only do we have non-farm payrolls on Friday, but we have, all those economic reports on Wednesday. So you'd have to ignore all of that and just trade the peso today, early, knowing that it's early. And that's not good. So I don't know. Even if it looked good technically, I'd be careful. Combs is watching from the hospital bed. Well, say hi to your nurse, Combs. You all right, buddy? Oh, why do I blame Europe for the Aussie CPI miss? Well, again, I think I explained it, but Europeans are supposed to import things from China. But because of the economic situation Europeans and British are in, they're not importing. Okay? So that means 650 million people are no longer importing stuff from China. So the Chinese economy is slowing down. And because the Chinese economy is not manufacturing stuff to send to Europe, they're not buying natural resources from places like Australia. Now, the two major exports for Australia, as you probably know, are iron ore and coal. Now, they have clean coal. Australia has clean coal, which they export to China because China is trying to clean up their environment, yet most of their electricity is produced by coal, so they can't really change that, but they can burn better coal than what's on the Chinese continent, so then they buy it from Australia. But other than that, if you melt down iron ore and then you sprinkle some coal on top, otherwise known as carbon, it comes out as steel. So if you're making steel in China for either making products like cars or something, or maybe building skyscrapers or whatever, if you need steel, well, you're probably going to bring in some coal from Australia. Why not? So because the Chinese economy is slowing down, they're importing less from places like China or from Australia, and the Australian economy slows down. The Australian economy slows down, inflation falls below the 2% target, and therefore CPI is flat. Okay. Okay, so hopefully that answers that question. So just moving sideways for now. Okay. I'm sure if you were going to try to swing it, you had a plan already, so there's nothing to add to that. So we'll just see where it goes. I mean, like, for example, if you were a bear on this, okay, when the market opened, this was a sell zone. So you were short this, I don't know, more than 12 hours ago. So, and your target is here. So there's like nothing to be said about that. And if you didn't do it, you're not a bear or you're not doing the work. So there's nothing to say about it now because it's already happened. So simple. Easy peasy lemon squeezy. Okay. We had our big snapback. So how do you want to trade this? This is going to come down to your bias. If you are now a bull, you do have permission because this, right, high is higher than that high. So now you have permission to buy a dip and take it north. Okay? You have permission. And this would be good news for the U.S. economy because a weak dollar is a sign of good things. Okay? The reason for that is the opposite of the European situation. Americans are feeling rich. Why would you buy an American product when you can buy a Chinese product for cheaper? So you send your dollars to China, flooding the global market with dollar, increase in quantity, lowers value. So the US dollar falls as it leaves the United States and goes into the interbanking system. In exchange for sending dollars to China, China sends you products. Okay, so that'd be a good thing. Okay, so that's the thought process there. If you want to be a bear, by the way, thank you for subscribing, Varhad. So if you want to be a bear, you have to back out, and you have yourself some resistance up here, right? So as a bear now, you're also thinking down, but you're thinking you're really here, right? I guess you're going to squeeze in and go for the. So let's move this. The new bottom, I believe, is here. So if you're a bear on dollar, your strategy now is to get short and get shorter. Okay? So you'll use the monthly pivot, which we've already highlighted here. So let's update this now and change this from monthly to weekly. Okay? You'll see that this is your weekly M3. So that's great for you. So you want this to come down. Okay? But that's a hard turn, isn't it? That's a hard turn. In fact, really what you're hoping for is that, right? Otherwise, you're counting on a V-shaped reversal, which is not the usual thing. Now, to make it a little more complicated, the other way this can reverse, because remember, what you're asking for it to do is reverse if you're a bear. It just made a bullish engulfing candle, right, on a daily, so it's not going to reverse easily. But what if you hit the weekly target before Wednesday? So maybe as the news comes out on Wednesday, we're already here, and then it comes down hard. Okay, that puts this zone back into play. Okay, so now we know this is the sell zone for plan B for bears, and then you change this back to monthly. Now this is why I typically have both at the same time, but I just want to highlight me going back and forth in the analysis. Okay, and you see we have some congruency here, so that's good. The weekly pivot profit zone is the monthly M3 this month and really next month, right? So here's the January M3. Here's the February M3. So that ain't bad. If you're a bear, you might get this. Okay, your plan A is here, plan A. Okay, your plan B is up here. And this would be better if it kind of did this, and then you took it downtown. Okay? La 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 la. Okay. What's going on here? So these are dailies. So these are for day traders. So we know the proper way to set up a day trade is off of a weekly swing, right? So this is a better place to be long, right? So the way you would do this on a daily, right? Sell the M3, but then probably buy the M2. Okay. Or 4-hour 21, but now we're way out here, right? So can you see I have an order here? Let me highlight it for you. I think I have to change the color on this one. Tool, color, it's yellow. Can you see this? Can you figure out my trade plan? Makes sense, right? I hope. I don't know, it seems reasonable, doesn't it? Okay, cool. It just happened to be sitting there. Let's look at all the yens. So let's back out. Let's do hourly, back out. Okay. So this one was range bound, and there was a minor breakout last week. Okay. Can you see this? So I actually bought that. You can see the entries right here. That's where I'm long. My stop is here. What's the target? Okay. Where's my entry? So the target's going to be here. Take a look at pound. Got to go into an hour. So what's been happening with pound? Down, up, down, up, down, up, right? I have an order sitting right here. So it has to fall another, I don't know, another 50 pips before I buy it. Okay. So hopefully that seems like a reasonable place. Once again, you can see it right here. So you gotta wait. It's gotta fall another 50 pips before I buy it. It's not a bad thing. So Kiwi we did, right, on the other pair. CAD. CAD, I'm long here, but I already have my stop loss at break even. This is vulnerable now to a double top, quite honestly. And this is it looks like an M3, so I really need to seriously consider getting out. Because the risk here is this. Okay. You also may recall that this week with the Fed meeting can be the week where the false rally ends, right? Yeah, oh, as we just asked. Yes, that has to do with the Fed meeting. So you have the significant drop in the first and second week of January. Then you have a false rally, which is just the same people that took profit buying back at a lower price. And then you have a further decline based on the Fed talking about raising interest rates again, because that's what they always do until summer hits, right? So that brings another wave of downward pressure. So yeah, so I have to make a decision now. Right. So I mean that's it. So I don't know what to do with this one yet. It's not really enough money for me to care, so, or enough pips. So you might as well just, I don't know. I mean, you have to make a decision, that's all. Wow, pound yen just dropped 10 pips. Remember, I just said I needed to drop 50 pips? It just dropped 10 pips. 50 pips isn't much on pound yen. Okay, this is opening hot. Bulls are going to buy it down here. Let's call it 131 or 130.50. Okay, that's the buy zone. Okay. If you're a bear, it's going to do this, this, and this, and this, this. So you got a while to wait. Remember, the first move down is not bears; it's bulls taking profit. Okay. I think this area here was the sell. Boy, did that drop hard, huh? Look at that. Nice little 382. Beautiful. Gorgeous. Look at that. This is suggesting dollar strength returns. Morning, Bina. Yeah, so we have a lot of news today, and we just got to let that work out. Let's go to the USD Mexican peso since we've talked about it a little bit. Okay. Got to be careful because it looks more like a double bottom than a double top. This is the weekly swing short zone, but this is the next month's monthly short zone. So I wouldn't even mind if it came up as a bull this week and then we take it down hard. So this is an M2, M4 week in my opinion. Do you guys see that? The only other thing to really play is you can see we're at a pretty key level, a psych level, right? So when the way you play a psych level is you break the psych level, you get low, and then you come back and you retest it, and that's kind of what we're doing here. So if you want to be a hardcore peso bull, you can do it now. You can. Now I prefer it to go higher before it comes down, but if you're already on this, like you've been playing this. That seems pretty reasonable right now. And of course, if that fails, then we're going way up here, right? But getting short in here falls within the playbook. Nice price action, huh? Down, 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 up, up, sell, down, 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 down. I mean, like even to draw it, right? So as soon as you're down here, you look left, you drag it across. Now you're down here, you look left, you drag it, you drag it across. Now you're down here, you look left, you drag it across. Now you're down here, you look left, drag it across. Now you're down here, right? And it worked until it stopped working. So we'll see now. You might say, well, Wayne, shouldn't it do this? Well, I think what's happening is this, this, and this. It's a matter of time frame. Okay. If that was your trade plan, then we're in the sell zone, which the sell zone is kind of like in here. So if you're looking at it not on an hourly chart, but on a daily chart, okay, then yeah, then this is your sell zone. Cool, right? Oh, busy week. Oh, busy week, guys, busy week. We're going to have a busy week. Keep your eye on the calendar. Yeah, Brooke says, isn't that a double bottom? Yeah, that's the danger. That's why I said I would rather it go up, higher up. Okay? That's exactly why I said I'd rather have it go higher up. And essentially what I was saying, so if you squeeze in that M4, what you're doing is you're trading it like a range. Okay, so that's what I'd rather happen, right? I'd rather see that happen. But if someone was going to short, if there are bears shorting, they're doing it here. You can do that. It's not ideal, but it's, you know, it's not trending on this point of view, but from someone else's longer term point of view, it would be. I mean, look at this, right? So, yeah, I'd rather it go higher, absolutely. And not just because I treat it like a range, but this is where bulls were supposed to get out. This is where bears are supposed to get in. So, yeah, so I would rather do that. Okay. Okay. Limen, I think we started with euro dollar. So, anyways. So I guess I will see you guys tomorrow. It's going to be a busy week, especially as we get closer to Wednesday for all that U.S. data. Remember, it's going to be all about the pound the next 2 days. So we have, who was it, Carney speaking and Draghi speaking like in an hour. So be careful, right? Watch your euro, watch your pound. So peace on earth. May the pips be with you. May your profits be above average. Thank you very much for being a client. Don't forget to subscribe. Click the Forex.Today logo. Watch the other pairs. And if you don't know how to trade that peso pair, there is a video available, how to trade the Mexican peso and why it works. Take care of yourself. I'll see you tomorrow. Thank you so much for being on my team, and thank you for being a client to Traders Way.